Welcome. In this video is ZBCN coin ready to attack? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. The descending trend structure that has been observed on the chart for a while can be interpreted as a technical reflection of the downward pressure the market has been experiencing recently. However, every descending trend does not imply that a bearish scenario will continue indefinitely. On the contrary, it suggests that at some point, this pressure will end, and the price may gain momentum to begin rising again. In the current chart under analysis, this descending trend is clearly visible and now appears to be technically close to a breakout. When this structure is broken, not only will the existing pressure be lifted, but the price may also chart a new upward path and potentially target previous highs. Descending trend structures are characterized by lower highs and lower lows over a given period. This structure generally causes hesitation among investors, as each upward attempt fails and the price falls back to lower levels. However, as the end of the descending trend approaches, this cycle begins to break gradually. Bullish attempts become stronger, selling pressure weakens, and the price finally prepares to break above this descending line. The current technical setup reflects this transitional phase. The price is very close to the descending trend line, and a potential breakout here would confirm the end of the trend and could trigger a brand new upward movement. Such technical breakouts are especially important for traders because breaking a descending trend not only offers short-term buying opportunities, but also provides strong signals for medium and long-term positions. This breakout indicates that the ongoing uncertainty in the market may be replaced by optimism, that investor confidence may be rebuilt, and that a noticeable increase in volume may occur. Especially when previous contacts with this trend line led to strong sell-offs. A breakout this time would signify a substantial shift in market sentiment. Buyers are now stronger, and sellers are in a weaker position. Additionally, the commonly used trend breakout, followed by retest structure and technical analysis, may also apply here. In other words, after breaking the descending trend, the price may return to test this line. A successful retest would confirm the validity of the breakout and further strengthen the upward move. In this scenario, the initial targets may be the previously identified resistance zones. Breaking through these levels could help push the price even higher. In summary, breaking the descending trend is a signal that the price is breaking free from downward pressure and may begin riding a new upward trajectory. Furthermore, volume indicators can provide important signals regarding the strength of the breakout. If there is a significant increase in trading volume during the breakout of a descending trend, it indicates that the breakout is much more solid and powerful. An upward move supported by volume shows that investors are not just reacting in the short term, but are also increasing their positions, creating substantial momentum behind the price. This is a highly positive development in terms of the sustainability of the upward movement. Currently, the fact that the price is hovering close to the trend line and volume activity is starting to pick up indicates that favorable conditions for a potential breakout are forming. Psychological resistance levels also play an important role during this process. Breaking a descending trend affects not only technical analysis, but also investor psychology directly. When a price that has been stuck in a descending pattern for a long time finally breaks above it, market pessimism turns into optimism. This situation encourages not only new investors to enter the market, but also existing investors to expand their positions. Thus, a strong bullish scenario may emerge in terms of both price and trading volume. Looking at price movements that followed similar breakouts in the past, it is evident that prices tend to rise to certain extents after the break of descending trends. But we can't make decisions based solely on trend lines. So let's take a look at other metrics as well. Stay tuned. The current chart structure being analyzed in the market is considered part of a 5-wave impulsive structure, one of the classic and highly powerful formations of Elliott wave theory. In the current technical outlook, it appears that the price action is now in the process of completing the second corrective wave and entering the preparatory phase for the next step, which is the third wave. According to Elliott wave theory, the third wave is generally regarded as the strongest, sharpest, and fastest upward wave. This wave represents the phase where investors strongly enter the market and the trend gains real momentum. With the second wave now coming to an end, the potential for this powerful third wave is increasingly growing. What's especially noteworthy is that in Elliott theory, third waves are typically at least 1/618 times the length of the first wave. This provides a very clear framework when identifying potential targets. If the market adheres to this classical structure, as technical analysis often responds with such patterns, it is not only likely that the price will reach the 1/618 Fibonacci extension level during the third wave, but it often surpasses this level as well. In this context, a strong upward move extending to the 272 Fibonacci level is a highly probable and technically supported scenario. The second wave is typically a corrective phase. Once this correction ends, the price often gains momentum as if breaking free from chains, and the third wave reveals the true nature of the upward trend. At this stage, investor interest and trading volume usually increase significantly. There are several indicators suggesting that the technical structure is now completing the second wave. One of the key signals is that the correction has ended with a noticeable drop in volume. This indicates that selling pressure is weakening, and buyers are preparing to take the stage. Additionally, the current price level is not only close to previous support areas, but also aligns with Fibonacci retracement levels, suggesting that this zone provides a solid base and could be the starting point for a new upward move. Such technical levels have historically produced strong results as reversal points. Therefore, a third wave initiated from this support zone could rise quickly and decisively, especially if supported by strong volume. In Elliott theory, the third wave is significant not only for its price targets, but also for its psychological effects. During this wave, market participants become more confident, investor interest rises, and this is directly reflected in trading volume. Thus, the structure supports the rally both technically and psychologically. This psychological wave effect helps buyers enter the market with more confidence, allowing the price to surpass resistance levels more easily and reach target levels more swiftly. Looking at the current structure, the 1,618 and 2,272 Fibonacci extension levels stand out as potential third-wave targets. These levels are not just speculative estimates based on probabilities. They are targets that have been tested many times in the past and are often reached during upward moves. Therefore, in the present situation, the likelihood of the third wave reaching these levels appears strong both theoretically and practically. Furthermore, attention should be paid to the sub-Elliott waves that may form within the third wave. This wave contains 5 smaller waves within it, indicating that the price will rise step by step and that a healthy upward structure will form with corrections along the way. In other words, the price won't just make a sudden jump. Instead, it will go through a controlled, volume-supported, and confidence-building upward process. This will enhance investors' trust in the price movement and support the sustainability of the upward trend. The MACD indicator is one of the most widely followed indicators by traders and technical analysts, and is an extremely useful tool for predicting the direction and momentum of price movements. Especially in times of uncertainty in the market, when the direction is not clearly defined, the crossover signals provided by the MACD provide extremely valuable information. In the current chart structure, the MACD indicator is approaching a threshold that needs to be carefully monitored. In particular, the convergence observed between the MACD line and the signal line shows us that a strong return movement in the market is in preparation. Currently, the MACD line is quite close to the signal line. Such convergence is often considered a harbinger of a big move. If these two lines cross each other upwards, that is, if the MACD line crosses the signal line upwards, this is technically perceived as a positive turn signal. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.